Today on the Blockchain Report, Bitcoin's dropped to around 96K after stocks tanked, AI plays cratered, and Jerome Powell reminded everyone he still controls the oxygen tank. MicroStrategy just became worth less than its own Bitcoin. The market basically said, love the coins, but we'll skip the company. And Apple's new $150 iPhone Pocket proves their latest innovation isn't AI, it's couture for your phone. All that and more on today's show. Let's go. Are you interested in effortlessly growing your Bitcoin portfolio? I sure am. And the Bitcoin credit card by Gemini earns you Bitcoin back on every purchase. You can use it like any credit card, buy lunch, gas, or your weekly groceries, and you'll earn up to 4% back instantly in Bitcoin or one of over 50 other cryptos straight to your account. All that with no annual fee, and right now, you can grab a $200 Bitcoin welcome bonus. It's the easiest way to start building your Bitcoin stack. Just go to Gemini.com to learn more. All right, it's time for this morning's market rundown, and Bitcoin not looking great. We're down about 4.5% in the last 24 hours. It looks like Fed Chair Jerome Powell came out and took a little bit more of a hawkish tone than people were expecting, so that second rate cut might not be happening this year after all, but we'll have to see how it plays out. But right now, the market is fretting. Bitcoin's down, everything's kind of down today, so it's a little bit par for the course. But there is some silver lining in all the chaos. So what I'd like to do right now is go over our Bitcoin Alpha segment where we take a look at the charts and see what's really happening beneath all of the surface. All right, so let's bring those up and get started here. Okay, so these are the three big charts we've got today. We've got funding rates, we've got realized profit loss, and we have the Mayer Z multiple score. All right, so we got three to go over. Let's get going and make these squiggly lines make sense, shall we? So first up today, this first chart, it looks chaotic. I know, it's like a heart monitor after drinking 4 Red Bulls. I've been there, but this is actually pretty simple, okay? So funding rates are basically the mood ring of the derivatives market. Now, when they spike up, it means everyone's going long, juiced up on hopium. Now, when they crash negative, it means traders are panicking and shorting everything that moves. Right here, you can see these massive spikes. These are the moments where leverage got totally out of control, okay? So we can see these arrows here showing right after the big spikes, right? So we got spikes here, here, and here. It then tends to cool off immediately after, right, as indicated by these 3 arrows, okay? And notice these red circles that we're seeing, right, over here, 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 in here, right? These are the points where funding has flipped negative. That, my friends, is what we call fear, baby. All right? So what matters is the pattern. Every time funding spikes, then trends downward, the price usually cools off after, and that's reflected here. As you can see, each spike, price then is cooling off, all right? And on the far right, you can see funding starting to calm down again, all right? Things are getting calmer over in this area here. All right, specifically this kind of green cluster right over here. That's the market catching its breath, meaning leverage is flushing out, and that's usually healthy for Bitcoin long term. All right, so let's go to chart number 2 here. This one is the net realized profit loss chart. It shows us when people are actually locking in real profits or eating real losses. Now, the tall green mountains we're seeing there, okay, that's people aggressively taking profits. So profit taking, profit taking, profit taking. This is basically the market saying, thank you for your service, Bitcoin, but I'm going to cash out now. All right, but after these spikes, you'll see we get these red puddles here at the bottom, right? Some major downward movement here. So these red puddles you're seeing, right? These are capitulation moments. This is when people couldn't take the pain anymore. They had to get out, all right? So now look what happens every cycle, okay? Take a look here. Profit-taking spikes then gradually fades down. We're seeing it here, we're seeing it here, we're seeing it here, and then boom, we hit a new cluster of losses. Again, those are our little red upside down mountains at the bottom there. It's kind of like watching the market emotions, having them swing from greed to regret on a loop, okay? And what's interesting is that each time the profit spikes fade, price usually consolidates or cools off, okay? So we can see that there, the price is cooling. And if you look at the far right, profit taking right now is actually way down from the peaks. We don't have a lot of profit taking here on the right side, okay? Meaning the market's hesitation is actually a sign that things are starting to reset. So there might be some good news ahead. And let's go to the third chart here for today. This one is the Mayer multiple Z-score, okay? It measures how far Bitcoin's price is stretched above or below its long-term trend, specifically the 200-day moving average, all right? So the Z-score is that orange line that we see at the bottom, all right? This guy right here, that's our Z-score. Now, when it gets super high, that means things are getting a little overheated, but when it dips low, specifically below the zero mark here, you can see on the right side, let me just clean this one up here. There we go. There's our zero. When it gets below zero, that's historically been an absolute killer of a buying zone. Now, check out these three yellow circles that we got here, right? Here, here, and here, okay? These are the low Z-score levels from previous resets, all right? And now look at the far right side, and we're dipping right back in to this same zone again, right here, here, here. And look what's happened every time we've neared this orange line, right? You can see, what does that mean? It means Bitcoin isn't expensive relative to the long-term trend. And historically, this is where the market catches its breath before the next move. And you can see every time we get close to that line, it then peaks right off. So we're here right now in the corner. So I think we should be expecting some liftoff here in the not too distant future. So combine this with the chilled out funding rates and the decline in profit taking, and right now we're getting a picture of a market that is resetting, not collapsing. So ignore the FUD, all right? It seems crazy right now, but things are okay. So let's kind of wrap things up in plain English here, right? So leverage right now is cooling down, profits are normalizing, and long-term trends say that Bitcoin is entering a value zone, not a mania zone, okay? That's where these charts are, how these charts are making the chaos look right now. It's a little slightly less chaotic than we're seeing with the actual number currently. So yeah, that's what we got right now. Obviously, we're seeing some panic in the market. We crossed that, or beneath that 100K psychological barrier that we know is so important, but right now it just looks like the market is resetting before the next leg up. So everybody relax, take a breath. It's all going to be fine. We're going to take a quick break, but when we're back, we got more blockchain report with today's top stories, and we got two special guests joining us. So get excited for that and much more coming up right here on the Blockchain Report. All right, welcome back to the Blockchain Report. So starting our show today, we have our first special guest of today's episode. This man has been orange pilling Aussies since before most people could spell blockchain, from studying Bitcoin for over a decade to co-founding Bitcoin Sydney, Australia's first and largest Bitcoin-only meetup. This guy has built one of the most passionate and educated Bitcoin communities on the planet. He's a believer, a builder, and one of the first in Australia to beam Bitcoin through space, literally. So let's give a big Blockchain Report welcome to John J.P. Pratt, everybody. JP, welcome to the show. We are super pumped to have you, and so is our studio audience. How are you? Yes,
good.
It is great. How are things down under?
Oh, fantastic! We've got a lot of stuff going on here. It's a really great community down here, and I'm really proud for the role that I have in running things here.
Yeah, and we're super excited to talk about it and learn more about what you and everyone over or down under is doing. But first, we got to kind of talk about the big thing on everyone's mind, which is the recent Bitcoin price dip that we've seen. Currently, we're sitting around 96K. We were just at 126. It felt like a month ago or so. So I gotta ask, JP, you've lived through every Bitcoin cycle since 2013. How does this current pullback to 95, 96K compare to past corrections? Is this just a healthy breather after all-time high runs,
I think some people,
or do you see deeper structural forces?
I think some people would call it a dip for ants compared to what we've been through if you'd been around since those days. And that's why I know it sounds like a bit of a cliche, but the expression is to sort of zoom out In fact, even earlier this year, back in April, we saw a correction from around, I think it was $109,000 back down to $77,000. So, and yet again, we went on up to $124,000. So we are still not any more severe a correction than what we've had this year, let alone throughout years, many years ago, when we didn't have all of the things that we have now in Bitcoin. There wasn't the good news that we have around now. There was no guarantee that the rest of the world would ever catch on to this very sort of fringe idea that it was at the time. You know, when you went through something like the collapse of Mount Mt. Gox, which is sort of faded somewhat into Bitcoin folklore now, but that took us from, we were at $1,200 and took us all the way down to under $200 in a relatively short period of time. And so, on a percentage term, that was devastating. And the whole mindset back then, there was no infrastructure back then. There was no financialization. There was no guarantee at all that well, I'm not saying that there's ever a guarantee, but there was not even any real much evidence at all that it would come back, But it was thought that if it did, it would probably we'd be golden from there. But that what we're going through now is nothing, because all of the economic tailwinds are still in our favor here. And so what I've always said with these sites of pullbacks, if you don't already sort of have a very established Bitcoin position, these periods are actually what make you. It's not the amount of Bitcoin you bought when everybody else is buying. It's how well you've availed yourself of the opportunities when the price is pulling back. So you're getting something like a 25 to 30% discount opportunity here. And not only an opportunity from what really wasn't, we didn't really have a bubble at all. So I think that has to be remembered as well. There's also another expression that says that the bear market you get is sort of the story of that bear market is written in the bull market that you had before. So if you have a sort of completely crazy, unsustainable, parabolic blow off top of a bull market, then it also means that your bear markets could be so much worse. But we really didn't have that. What we've still in a sideways market here. We didn't really have a bull market as such. We've been in a sideways market all year. We're certainly not at the year's all-time lows, and yet at the same time, we've still got tremendous amount of buying pressure behind us. I've never seen anything like the amount of volumes we had moving. I mean, for years, for a decade, the really early OG coins, if you know what I mean. I'm talking like way earlier than I'm not that early, but there's guys I know that are like pre-2013 early, 2010, 2011, even earlier. They mined their own coins, and those guys just were sitting on thousands of coins, and they've been spending their coins for a long time. But now there's a lot of those guys who realize, hey, if I sell a private jet's worth of coins or whatever my dreams are, I'm still going to have a massive stack. And at the same time, now I've got that liquidity in the market to take up all those coins. So we've seen a tremendous amount of OG and early coin selling that before that, as I said, it was hanging over our head like a sword of Damocles. And if it had dropped a couple of years ago, it would have wiped out the market. There just wasn't the depth of buyers to do it. And now we're around $100,000. I know we've snuck slightly under there now, but the fact that we haven't crashed 80% with such pressure speaks absolute volumes about how much assurance there is from some really big, experienced players that are willing to still buy this thing up.
Yeah, no, it seems like we're in a fundamentally different space. I think, in past drawbacks we've seen, it's often from these big catalysts that we remember throughout the lore of Bitcoin, like the FTX collapse or something, and you saw this huge pullback. But this one just kind of seems to be people being disappointed because we expected October, didn't happen. November is usually the best month for Bitcoin. Hasn't been the case. This is supposed to be the best bull run yet. People were expecting $200,000 plus Bitcoin prices, but we haven't seen that. But the foundation is just so different than where we've seen in the past that, I think people are freaking out because of the numbers, because now we're at that 6-digit number. So when these drops happen, we pull back 20 grand, it feels like so much, but it's really only like, If it 20 grand from 120 is less than 20%, it's like 17.5%.
Yes.
So yeah, it's like we're on such a more stable footing now, but people are freaking out just because I think the numbers are a lot bigger. So psychologically, it's a different space. And my question for you, John, is when you see Bitcoin tank alongside tech stocks after a Fed statement like we just saw, it kind of makes you wonder, right? Like, are we still too tied to TradFi sentiment? So from your vantage point right now, how close are we to that moment where Bitcoin finally decouples from Wall Street's mood swings? Because right now it seems to be we go with however Wall Street is feeling.
I don't know that it's necessarily something that will happen. It used to be considered, again, when I sort of looked at this about 10 years ago, it used to be called an asymmetric hedge. Something Bitcoin sort of moved in the opposite direction to what the rest of the market is. But it's actually, in fact, as time goes on, become more coupled with the general market sentiment. I think the reason for that is that Bitcoin is something that trades 24/7. And it's an easy source of liquidity to be tapped by. So if your, sort of stocks and things go down and your positions are getting liquidated in other things, Bitcoin is something you could very easily tap for liquidity to prop up your other positions. And so that's why the two things I think have gotten tied together over the last few years. So unfortunately, I don't know. That might be sort of in exchange for the sort
Yeah,
of the
no,
deep
I hear you.
liquidity that we've got from the market. I'm not sure that that might be that what we have to accept as but the two things tied together as a consequence of that. It's
Right.
fortunate that
No, that's
now
well
that the
put.
price isn't really, the price isn't really driven by sort of small buyers anymore. It is really now in the control of the institution. So from that point of view as well, I wouldn't necessarily expect that the same patterns are going to play out like that sort of whole 4 year cycle thing. And just on a point you mentioned
Right.
before, um, the reason I think why this well, I wouldn't say crash, but it's not really a crash. It's a pullback. It's again in line with what we've had this year already.
Yeah.
Seems worse than what it is because it's in comparison with some very lofty expectations that were put. You mentioned that
Right.
before. We had a lot of the influencers, putting out their ideas of Omega candles and promises of hundreds of thousands, if not $1 million, and that sort of thing. And unfortunately, and I said it at the time, I said it a year ago, is that these predictions fail to account for the idea that anything other than newly mined coins would be getting sold. It based these predictions on only the new coins that were coming out. The 3.12 bitcoins, the 450 bitcoins that are mined every day. It didn't take into account the huge numbers of people just wanting to upgrade their lives. I mean, this thing is money after all. Now, I know that we're all true
Right.
believers in terms of thinking this is the best money, but even the best money has a purpose, and that sometimes that purpose is to do things like, upgrade your life and buy the things you want and fulfill your other objectives in life. So that's yeah, I think that's one of the reasons why people are also disappointed, the sort of unrealistic expectations. But again, the huge amount of buying as well should be very reassuring. That's keeping us where we are, despite unprecedented volumes of OG selling.
Yeah, and it's putting a lot of newbies who have come into the market into a bit of state of panic right now, though, right? Like if you've been through the swings before, you know how to weather these ups and downs. But again, we have a lot of these newcomers to the space who are freaking out and they're saying, I thought Bitcoin was supposed to protect me from all this. So my question to you, John, is as someone who spent years teaching at Bitcoin Sydney, like how do you explain volatility to newcomers in the space that are experiencing this shock for the first time? I feel like it's almost a rite of passage at this point once you enter the Bitcoin space. What do you think?
It is, but what you don't get huge upside wins if you're also not prepared to weather the volatility. That was always the case. And if you're not on
Right.
leverage, don't. So what I say to people, don't use leverage. Okay, if you use leverage, that's where people get into trouble. But this should be looked at. This is not a get rich quick scheme. This is a not get poor slowly scheme. I didn't coin that phrase, but credit to whoever did. But that is it. Look at it from at least a kind of 10-year time frame because money, if it were that easy just to sort of buy some and get rich quick, in a couple of years, that would kind of already arbitrage out, and then it sort of wouldn't happen if you know what I mean. No, you have to do essentially what the vast majority of people are not prepared to do, and that is to be patient, to have a low time preference, to think of this as as a 10-year thing. And if you are just putting in, the what you might have otherwise had as savings, you save it into Bitcoin. So you're still working, and after you've paid, obviously, what you've got to pay to live. what you might have otherwise saved uselessly in fiat money, we know what a giant scam that is, right? You put your money, if you're to put your savings in the bank, you get less, like the interest paid is less than what the debasement on the inflation on the money is. So that's a total scam. So the alternative, if you put it into Bitcoin, these sort of days like today are the opportunity where you will get a greater percentage of the overall whole, because that's got to be remembered as well. There are a finite number of Bitcoin, and so that if you're still in that 10-year kind of stacking phase, these pullback periods are genuinely a gift because you are now able to purchase a larger percentage of the finite whole than you otherwise would have been able to acquire.
Yeah, no, this is absolutely an opportunity for everybody to get a little bit of a bigger slice of this Bitcoin pie that we know only gets so big. So it is definitely an opportunity for a lot of people. But, with Bitcoin under pressure in a way we haven't seen and since it was earlier this year, we are seeing kind of who's in it for the mission and who's in it for the momentum. So my question for you, John, is do these shakeouts actually strengthen the network and the culture by filtering out the noise and reinforcing conviction among the signal right now?
Yes, there is. You do certainly notice a difference across the community. Typically, in sort of raging bull markets, you do get a lot of people in that are only there for the price action, and then you sort of never see them again. That certainly does happen. I think that's happened less over the last few cycles as those sort of parabolic rises have become somewhat more tamped down, more muted, less violent.
Yeah.
That we have a more consistent number of people involved, but it's possible. That's not necessarily a binary thing either. I mean, I don't think it's necessarily a bad thing that someone should come in to improve their purchasing power. I mean, after all, we do spend a lot of time with people telling them that the whole point of Bitcoin is to protect yourself against currency debasement. Like you've got, because the alternative was like, their fiat currency that was losing value. So, the idea that people should buy a currency and want it to increase in purchasing power, we shouldn't. I don't think that that's a bad thing for people to go in with that belief. But it has to be a longer term belief. It's not something that you could like make it like judge within the space of a few months or even a year. But I can tell you this though, that anyone who has held the course for at least 4 years has not found themselves down like they've been. So if you could have bought it like the highest possible peak, but if you'd held that highest possible peak for 4 years, you were in the green. And and even if you didn't buy another Satoshi more in that you were in the green 4 years later, and then it was sort of up from there. Now, if you'd continued dollar cost averaging down, so if you continue buying throughout the dip, well, then that brings your dollar cost average down, and then you find that you're actually in the green much, much sooner. In fact, many people would find themselves in the green within like a year. Because of the cheap coin they get after a big bust. And that is, again, assuming that they started at the very, very top of the bull market. And, with given the amount of, you can see the length of the chart, there's only a few points on the chart where, like you'd have had to have timed it to buy it that most unfortunate period. Most people have had plenty of other chances to get in at prices that are much lower than that.
Yeah, this is just one of those opportunities, right, where you can either look at this and be fearful, or you can look at it as just that, an opportunity to, continue packing your bag. And, despite all the interim fear right now, if you've been in this space long enough, this is just a quick breather, I think, before the next leg up. So I'm still feeling pretty good despite some of the FUD that we're getting around right now. And like you said, the fundamentals are so good. We have so many economic tailwinds.
Yeah, I mean, sentiment online is absolutely catastrophic. I mean, it's worse than I've said. And this is a good thing, really, because I think when you've got that exuberance, the market sort of doesn't want to just like reward what everybody already thinks. Otherwise, like, because not everyone can make, can be up on the thing, up on the deal. The market sort of wants to do if everyone already believes it, then it sort of means that everyone's already got their position, and therefore there's sort of no one else to sort of come in and push it up anymore. And so what you kind of want to see is you want to be kind of buying when everybody else has given up, because that makes you the rare person that wins. Like not everyone can win. Like a lot of people, and will drop away. Will give up, rage quit, sell all their Bitcoin at the bottom. They've buy high, sell low. We've seen all that before because they had too high a time preference. And those people, it'll be at those people's expense, those who gave up, that the ones that stick around, because they understand the fundamentals of this thing. That's the ultimate thing. You shouldn't be doing what everybody else. We actually learned this, a very interesting thing that happened in Sydney recently, and it may have been matched with similar scenes around the world. It was the lines outside the gold bullion offices. I don't know if you noticed that in your city there, Hank, but in Sydney, in Martin Place, a few weeks ago, when gold was up around $4,400 US dollars an ounce, there were literal queues for a
Yeah.
block for people lining up to buy
Yeah.
gold bullion. And anyway, come
Yeah.
till the
We
other
had that,
day,
but at
there was
Costco.
right. Okay, they sell gold there, do they? Right.
Yeah.
Okay, you get anything
They
at a
do. They
Costco.
sell everything at Costco.
Yeah.
Yeah.
And so now a couple of days ago, an article came out showing how no queues anymore. So, and I made a tweet saying they literally did the meme, the Bitcoin meme where there's the Bitcoin at
Yeah.
$124,000 and everyone's sort of, it's a giant pylon and then there's no one there when it's cheaper. And the gold people in real life
Yeah.
did that. There's like no one now. No one cares. It's like dropped 400 US dollars or something. No one cares. So don't be those people.
Yeah.
Don't be the lemmings that just follow. You have to have your own, you have to believe in something. You have to kind of have your own initial investment thesis and be willing to stick with that, regardless of what the rest of the people are doing. That way, when the rest of the
Yeah.
people do come along, then you're already in. And it's those people that are going to lift you up. You're not going to be part of the group of people that lifts others up that already kind of knew what they were doing before you just followed along.
Right. Well, it's a lesson that applies to Bitcoin, but also just life in general. And it's that it seems that life rewards doing the hard thing. And right now, the hard thing for a lot of people, especially people that are new in the space, is standing pat, standing on your conviction in Bitcoin, and just being cool. And the plan continues going forward, even during some of these more turbulent times. And you will be rewarded for that if you just show patience, like you said, and wait. So I think this is just another trial in Bitcoin's journey, and some people will emerge better because they went through it, and some will dip out because that just wasn't the kind of suffering they were willing to endure. They would prefer the suffering on the other end of it when they don't have Bitcoin and it's a million or whatever, and however long
And
that
not only
takes.
that,
So,
it's
yeah,
just
no, I
like one
totally
less
feel you.
person. The people that drop out now, it's just one less person that's going to dump on us later on if they've got sort of weak hands. The fundamentals haven't
Right.
changed here. In fact, the fundamentals continue to
Right.
improve. In fact, I don't know how much better the fundamentals can get really in terms of every, like these are, back in sort of 2014 or 15, the sort of thing that would make the Bitcoin news would be some child's lemonade stand, putting up a fixed wallet, on-chain QR code to take Bitcoin. That was
Yeah, so
literal. That
cute.
that would make the front page of Reddit. You fast forward like
Yeah.
another 10 years, you got the president of the United States saying that, yeah, I'm stacking hard, pretty much. I've got a big pile of
Yeah.
Bitcoin. I love Bitcoin. And, yeah, the contrasts don't get much greater than that.
Yeah, fear and greed index is at like 15, which is extreme fear. Yet we have SoFi coming out. We got JP Morgan, Chase is saying they're going to be accepting, doing, offering crypto services for their clients, even though just, Jamie Dimon has always been against it. So you're seeing big institutions who might have been against it even having to acquiesce and join it because the demand is there. So like you said, the foundation remains the same. This is just a period of that we're going to get through just like we did all the other ones. So I remain very bullish as things move forward. Now, John, I want to get into our deep dive with you so we can get a little more insight into what you are up to down under. So let's roll the stinger, guys, and get into it. All right, so now we're here for our deep dive with John Pratt. Now, John, I want to get to the beginning with you because I'm always interested in hearing how people got into the space. You specifically have been in Bitcoin for like 12 or 13 years now. So I want you to take us all the way back to the beginning. Like, what were you doing before Bitcoin entered the chat, and what first drew you into the space to begin with?
Well, for me, it was I had a sort of the guy that sort of you might sort of see my background here. I'm sort of a bit of a tinkerer, I suppose, but I'm a guy that likes to understand how things work, whether that's sort of machines
Yeah.
or processes or something like that. And I think one of the things that a lot of people don't understand very well, and certainly it was a mystery to me, is one of the things that's fundamental almost to everything. It's like it underpins almost every decision that we make, and that is money. How does that work? What is it? How is it created? How does it work? How is it kept a track of? All of these sorts of things. And anyone who's sort of decided to go down that rabbit hole quickly finds out that the the fundamentals, what it's based on. Um, Put it this way: if you proposed the system today, and we already had a Bitcoin standard, you would look upon it as like the most brazen, outrageous, ridiculous scam you've ever heard. Like you're saying that there's like a group of people that can, that can just decide how much money there is in the system. They can print more of it. They can lend it out at interest. They can lend it into existence and pay them and pay themselves interest on it. The whole basis of the fiat money system, which literally means, like it's the word fiat meaning just by decree. It's not based on anything. A lot of people still think that, that their money has some sort of gold backing, or there's an equivalent amount of it kept in the bank. And of course, you very quickly realize that none of that's true. So what I'm getting at with all of that is, if you've sort of ever even taken a relatively superficial look at the way money works, you realize that it's based on a complete, mirage. So when you do hear about something like Bitcoin, and I think I might have heard about it, it might have been something that sort of came across my Facebook feed in late 2013, when there was, to be fair, that was a fairly frenzied bubble at that time as well. So a lot of people were talking about it, but it suddenly, for me, made sense, because it rather than being the private currency that I originally thought it was, okay, this is just another private currency, except it's just digital tokens. There was a very real basis behind it. There was a very real revolution in computer science behind it, a solution that had been found to achieving a consensus when you don't have a central third party deciding what the status of the ledger is. So what I mean by the status of the ledger is the status of how much money everybody has. And when I learned about how it actually worked, I realized, this is amazing. Like this, that we can now do money this way. So I realized reasonably quickly, after having looked at it properly. I mean, we all hear about it an early time and then don't act on it, and then we look at it later on a second time, and then when we look into it properly, we sort of, the penny drops. Pardon the pun.
Yeah.
But anyway, the point is that I saw it for solving very much the deficiencies I saw with the legacy monetary system. And so from there, I kind of had to have some. And when I say have some, I mean back then it was treated as though, look, it's not good enough just for you. Like, it's not going to succeed just because you believe in it. Other people will have to come
Right.
around to the same realization too. So this is not a guaranteed thing. And so back in those days, people didn't generally dump huge. It's not like now where you got people saying you should borrow to buy. Which I still don't recommend, by the way, but people who borrow money to buy Bitcoin, or it was like, put a small percentage in. Here was the mantra: do not invest more than you can afford to lose. That was the mantra, because it
Yeah.
was, you should have really much considered that if you put the money in then, you should pretty much consider it gone, because it had like maybe a few chances in 10 of working out.
Right.
But anyway, like very soon after I sort of first dipped my toe in the market, then of course, with MT Gox, the market just tanked very badly. And of course, all the talking that I'd done, I was very excited about it in late 2013. But I thank every day for that bear market, because that was again the opportunity to actually sort of stack more than I otherwise would
Right.
have stacked. That was so, because that was, like if it just remained at $1,200 or whatever it was, what, I probably wouldn't have bought much more. But I kind of had to, almost in a bloody minded way, kind of double down on my own conviction as to what this was. No,
Yeah.
it's, I'm not wrong. It's the market that's wrong. And it and it was, but there was no way to be certain of that at the time. So that's how that
Right.
went. And there was a meetup scene in Sydney as well. I started going to Bitcoin meetups and meeting other Bitcoiners in 2014. And then we had things like, I suppose you could say that was 2017 when altcoins came along,
Yeah.
and blockchain became the kind of dominant narrative. People complain. Not to rip on the title of your show or anything, but the idea was that people
Rip
sort of
away.
came out. You had a whole lot of kind of suit type people that had missed out on Bitcoin, and they were very embarrassed for having done that, mind you, because remember, Bitcoin was surging again to $20,000. And remember that these are the people who always place themselves as sort of business types, finance types, who'd always put themselves in the position of being the ones who should have seen this kind of thing coming. And so, having ignored it or having been skeptical of it, they, I suppose, had a lot of egg on their faces when it started to really rip again in 2017. And so their cope mechanism was the idea that, well, Bitcoin isn't the real innovation here. It's the underlying technology. I don't know if you remember yourself that line they used to say this. It's not Bitcoin that's important. It's the underlying blockchain technology. And so we're going to take that technology and we're going to strip that pesky currency out of it. And we're going to try to do all these sort of things with blockchain. And so that became that. And of course, all of the altcoins, which again were just sort of there's a whole lot of reasons why altcoins do not have the legitimacy of Bitcoin. One thing being is that you can't replicate digital scarcity. Altcoins are,
Right.
are things that are just infinite, absolutely infinite, and will continue to dilute each other forever. So, if gambling is your aim, go for it. If that's what it is, fine. But let's not dress those other things up as anything more than they are. Um, because no one investing, for want of a better word, in those other things is interested in anything other than gaining more dollars or whatever their local currency
Right.
is, or more Bitcoin. So, but a lot of those things became a sort of a huge amount of noise in the space throughout 2017 and early 2018, although the bubble was already popping early 2018. So a few of us,
Right.
including Van Lavera and myself, decided to get together and start a new meetup that concentrated purely on Bitcoin. It would continue talking about Bitcoin, whether it was a bull market or a bear market. We would have monthly guests come in and give talks to keep the numbers up. So, because a lot of meetups before that were generally just socials, drinks at a pub. And
Yeah.
so throughout that period, throughout that bear market, we kind of kept enthusiasm up in the local community with speakers every month talking about a Bitcoin topic. But that was the key thing, and we had essentially two mottos. The nice one was not your keys, not your coins, but the unofficial one was no shit coining, no blockchaining. In other words, to keep the signal to noise ratio up and to keep all of those other distractions out of it. And so yeah, look, I'm very pleased with the way that's went. It turned out that you could sustain a vibrant and well attended series of meetups without having to talk about all of that other stuff and just keep it with Bitcoin. And we've kept the numbers up pretty consistently. We get about 50 to 70 people at a local Sydney meetup now, plus the socials that we also run now in addition to that in the local suburbs around Sydney. So and so that's been, I suppose, 7 years now, and the community has expanded quite a lot since then. In fact, we have a big event coming up in a couple of weeks
Yeah.
that draws
Tell us about
Bitcoiners.
that.
Yeah, so it draws Bitcoiners from all around Australia. So that's sort of one of the things that kind of, I guess, is what I'm about to tell you, is one of the things that kind of emerged from the meetup scene. It emerged from the meetup scenes of Brisbane, Sydney, Melbourne, even the ACT, Adelaide, and what we call those is a Bitcoin bush bash. And these started at the very end of 2020. And so just as we were sort of coming out of one of the first lockdowns in Australia that we had throughout that period. And what that was is that it was just the idea was is that Bitcoin is if it's like that old sort of a riff on that old Bible quote. If Satoshi says that if two people are gathered in Satoshi's name, then there shall be a Bitcoin meetup. And so as long as and this meetup was held, if you know, it wasn't a meetup, but it was like a weekend thing, would be held in a town called Murrurundi, which is like a very small town. If you look at a map of Australia, located roughly between one of our northern capitals of Brisbane and the Australian Capital Territory. But the point is it was a country town that people could meet at rather centrally from a couple of different ends of the east coast of Australia. And at that first bush bash, I think we ended up with like 20 or 30 people showed up at that. And in fact, another member, Catan, and I actually demonstrated. You mentioned actually in your opening, we demonstrated just for fun, to show people. We did a kind of nodes presentation, and one of that, and that included actually connecting our node to the Blockstream satellite. This sounds extremely nerdy, I
Uh,
know, but it was a fun thing. Hey, it was like we did a transaction and then we watched as this node that was only pointing with a satellite dish. We had it in the beer garden of a hotel in this one horse town, and we had the satellite dish pointed up and a software defined radio connected to it, and that went back to the node. And that we saw the Bitcoin transaction come in on the node. So we were demonstrating there the extreme robustness of Bitcoin. The idea that I don't really think many people are going to do this, but you could, like that whole thing where people say, well, what if the internet goes down? You've heard that objection. It's sort of
Yeah, yeah, yeah.
kind of nice to say, ah, we have something for that. We've got
Right.
this. There's a thing called the Blockstream satellite that you can just park that and you can do a full. You can synchronize a full Bitcoin node on that, and it takes 2 weeks to download the whole blockchain off it, but you can do it once you've got
Yeah.
your node synced, then every 10 minutes you can receive the transmission from the satellite and the transactions will keep that node up to date. So if there was like an isolated community, that node would keep all of the other nodes in that isolated section of that sort of cut off, I guess, if you can imagine an island that gets cut off from the rest of the internet. Well, as long as one node on
Yeah.
the island is getting those latest blocks down from the satellite, it'll keep all of those other nodes up to date. So someone knows if they spend their money, they can see the transaction still come through. So that could be
Very
in
cool.
certain situations, there could be cases where that's useful. I think some people might say Starlink may invalidate that a little bit, like make that a little bit redundant. But then Starlink, maybe something happens there. You are relying on one company to run that. So nevertheless, it was a fun project. We had it in the beer garden. That was the first presentation. Since then, there
Hmm.
have been bush bashes held yearly now in Beechworth down in Victoria and Palm Cove up in Queensland, and more recently one over in the far west of the country, which is a place called
Hmm.
Bustleton, just south of Perth. But we're about to have our New South Wales-based bush bash in 2 weeks. That is held in the
Hmm.
town of Parkes, so that's about a 4-hour drive west of Sydney. And it's also reachable within a day's driving of Melbourne, Adelaide, and Brisbane. They're the other three big state capitals. Most of the Australian people live in these capital cities, so it does put it within sort of 1 day striking
Hmm.
distance of a really large percentage of our population here. And we also call
Hmm.
that proof of work. Like people have to go like a little bit out
Yeah.
of their way to get there. But we run these things and they're free events. There's no registration. Everyone's privacy is respected. You don't like there's no photographs or anything like that of people unless they consent to that.
Right.
And people and there are presentations again that go throughout the whole weekend on various Bitcoin and Bitcoin adjacent topics. And we certainly
Hmm.
welcome any international visitors as well. For example, I've got my Bitcoin Alive T-shirt on here. If your listeners could see, that is
Oh,
the
nice.
yearly Australian Bitcoin conference that I also host. Well, I say I host, sorry, I MC that
Oh.
conference. That's
Hmm.
I'm not sure when that's going to be on in 2026, but uh, nevertheless, that's the big Australian Bitcoin conference, and we'll probably try to align a bush bash to occur like 1 week either side of that. So if there are visitors that want to come to Australia and learn, I think traveling where the Bitcoin stuff on is a great way of traveling. By the way, if I could add that as a tip to sort of
Yeah.
Bitcoiners watching, um, that's something that
Hmm.
I've enjoyed doing this year. So I've had a chance to get to Seoul, to Hong Kong, Bali, and coming up Abu Dhabi in the Bitcoin magazine conference being Bitcoin MENA being held in November. So I think that's a great way of traveling too. So I say in that respect, if any international visitors would like to visit Australia, there's a lot going on here, and there's a great lot of people you can meet and hang out with, and particularly there will hopefully we'll be able to get the Bitcoin whenever Bitcoin Alive is scheduled. I hope an event date will be announced on that soon,
Hmm.
and a bush bash arranged sort of in back-to-back weeks. That would be a great opportunity to come and visit us down under here.
Yeah, I mean, it sounds like you've built quite the culture down there. And I got to say, this might be a stupid question, so please forgive my dumb, ignorant American brain, but does the Bush Bash at all involve clubbing invasive species of marsupials as you guys talk about Bitcoin or something? Because that's kind of what I just imagine you guys with clubs knocking
Oh,
down wallabies and
oh,
stuff that are
that's
overgrown.
illegal. That's
That's
illegal.
probably
No,
for the
it's a bit of
best.
a it's a bit of an expression. So bush bashing meant literally just like, and by the way, it's not camping either. It's like these are in towns that maybe towns of maybe 5 or 10,000 people where there's sufficient accommodation for people to stay in hotels. But to bush bash usually meant to sort
Hmm.
of go out there and sort of maybe drive or walk through the bush. I guess you'd yeah, it's more of a it's more of an expression, not an act of animal cruelty.
Yeah.
So
Okay.
yeah.
Again, forgive my American brain, but it's just
No, I
because I know
don't
people
blame
go
you.
on
There's
like
if
cool
you
walkabouts and
There's
stuff
yeah,
there,
well,
right?
there was actually a movie. I think it was from 1971 or something called Wake in Fright that had a very harrowing scenes of a kangaroo hunt that might give some people bad ideas about what goes on in Australia. And kind of thing did happen once,
Yeah.
but no, I'm pretty sure that's illegal now. Nothing to do with us.
Okay. Glad to hear it. Glad to hear it. I'm a very no animal. I don't want any harm to animals. Just the invasive ones. I thought you guys had more kangaroos in Australia than people, so I was like, maybe that's something you guys do there.
We
I don't
do,
know.
and
Please forgive me. You do.
yeah, we do.
So
More sheep
you can
as
forgive
well.
my ignorance.
And cane
Oh.
toads apparently. Well, they were an introduced
Oh.
species in Queensland. So, oh yes, there's it's not a huge population in Australia. Just for those who don't know, it's 25 million or thereabouts. So, um, that
Yeah.
doesn't sound like a lot, but bear in mind it's very much a matter of a lot of Australia is arid lands and bushland. So
Right.
it's like yeah, within the cities, it's as potentially crowded and as busy as any of the cities that you would have experience of in the United States.
Yeah. Yeah, no, I know you got some big ones there. And big numbers have been a big story of this year. So I want to play a quick game with you while we got you, John, here before our time runs out. So guys, let's go to camera 3 here. So John, as we know, this has been a very interesting year for Bitcoin. A lot of expectations, as we spoke about, haven't quite been met. And a lot of those expectations that we saw earlier in this year were regard with the price toward the end of this year. People had very high expectations. So what we kind of made here is kind of a Price is Right style game. This is not financial advice of any kind. This is just for fun. And we made the stakes really high because whoever wins this game, we're going to send a Roxom Patagonia to. So I really want you to think carefully about your answer here. And to give you some context on the right, you got some of our previous responses from some of our other favorite guests. You can see they range quite considerably, and you're kind of at the benefit of doing this while the price has been down a lot of, a lot of these people gave these their bids while the price was in the 1-teens. So you can see on the lower end, we have like Grant Cardone at I think 134, I think 142, Knut Svanholm still at the very top of the mountain with 443, God willing. So for fun and games and with the Roxom Patagonia on the line, I would love for you to just give us your prediction. Clock strikes midnight, December 31st, 2025. Where is the Bitcoin price going to be? Is it still going to be a beautiful princess, or is it turning into a pumpkin at midnight? What do you think?
I am going to say $110,000. I don't want that. That's not what I would like to be true. I hope that Canute's
Right.
price down there comes true. That's what I want to see.
Me too.
But I'm hedging my bets here. So
Me
at least
too.
if Canute's doesn't come through, I get a free Patagonia pack out of it. So I think if I pick the lowest price, I've probably got the best chance of actually
That's
winning the
true.
prize here. So put me down for 110, but I hope Canute wins.
You hope Canute wins. Me too. We can buy our own Patagonias if Canute wins
We
for
all
sure.
win
So
then.
awesome. Exactly. Let's get back to camera 1 here, guys. All right, John. So our time is running short here, but while we still got you, I'm sure you have gained a lot of new fans from our audience that are interested in learning more about you and what all of your Bitcoin meetups at Sydney and how those are going. What's the best place that they can go to get more information so that they can, maybe become part of those Bitcoin meetups, or at the very least get more information as to what you and your squad are up to?
Definitely. My Twitter handle is JP_technology. As for our meetup group, we have www. I don't think you need the www anymore. bitcoinsydney.org.au. There's that. Sorry, my apologies. There's no AU. It's bitcoinsydney.org. Forget the AU.
Okay.
We also have bitcoinbushbash.info. We're just about to update the website there as well to include next week's not next week's, to the Bush Bash in a fortnight's time. So if you go to, but mainly if you go to bitcoinsydney.org, that will take you to our meetup page, and all of our Sydney community events are listed there, including, by the way, the Bush Bash as well. So from there, you can find out everything that's happening in the community here. And we also have there's also another Twitter link. You can go to Bitcoin_Sydney on Twitter as well for, again, where I announce all of our Bitcoin Sydney events. So look forward to meeting anyone who comes to Australia to visit us here. Because there's plenty going on.
Amazing. That all sounds great. I certainly encourage everyone to go check it out. And just to reiterate, the Bush Bash is not clubbing marsupials, unlike I thought it was. So just want to make sure everybody is very clear on that one. Well, John, I got to tell you, it's been such a great time having you on the show with us today. We really appreciate you joining us. And I know it's late over where you are. So thank you so much for staying up to be with us here on the show. And we hope to have you back real soon to chat about what you
Love to, Hank, anytime. It's been really great talking to you.
Bitcoin.
Yeah, no,
Likewise,
it's been terrific.
It was so fun, and I hope you. Are you already in? Is it already Saturday for you then? Is it already the weekend?
Yes, it is. Yes, it's Saturday morning. Yeah, I had a bit of a nap.
Goodness.
I had a nap, so I've had some sleep. I've woken up, and I'll maybe go back to bed. That worked out fine. So happy to do this again anytime.
I love it. We loved having you, John, and get some rest and enjoy your weekend. You deserved it, my friend, and thank you again for joining us. It was a blast.
Pleasure, Hank. Bye-bye.
Cheers. Bye-bye. All right, we're going to take a quick break here at the Blockchain Report, but when we're back, we're going to be joined by our second guest of the day to talk today's top stories, so you are not going to want to miss that. More Blockchain Report when we're back in just a few.
There's Bubble Boy. I'm a bit changed, but sounds familiar, right? Let me tell you a hard truth. The S&P isn't rising. The dollar's falling. That's the trick. Monopoly money. It's ice melting by the second. Your savings, your salary, your time. Worth less every second. Everyone's using the wrong measuring stick. Switch the denominator. Price the S&P into Bitcoin. Hard, fixed, unprintable. Suddenly your unstoppable index, it's collapsing. And while you cling to dollars, well, Wall Street already switched. Before, you needed two brokers.
Still getting my ninja bonus though, right?
Plenty of spreadsheets. And my quant!
I hate this part.
I was right, and I'll be right again. If I were you, I'd thank me.
You know my name's Dave, right?
All right, it's time for this morning's Bull Run where we go over the top stories of the day. And joining us for our Bull Run, we got a special guest. He's not just a Bitcoiner and a builder, but he's also a lawyer. And he's the founder of MicroSeed, the company making one of the toughest, sleekest, and most discreet Bitcoin seed phrase backups on the planet. And he's here to talk about Bitcoin self-custody and how proof of stubbornness built something the entire Bitcoin community didn't know it needed until now. So let's give a big Blockchain Report welcome to Dan White, everybody. Dan, welcome to the show. We are super pumped to have you. And so is our studio audience. How are you on this Friday?
Oh, I'm fantastic, Hank. Thanks for having me on, man. That was quite an introduction. I appreciate it. Thank you. Thank you.
No, absolutely. We're pumped to have you on. We know today is a particularly interesting day in the Bitcoin space, and we got a lot to talk about, and we got a lot to talk about you too, but we're going to do that later in the show. Right now, we're going to go over today's top stories and jam about it. You ready to rock?
Yeah, I'll do my best. I feel like I'm on a game show.
All right, that's all I ask of you. Beautiful, let's do it. All right, so first up, we got global markets woke up this morning and decided to have a collective emotional breakdown after the Federal Reserve hinted that, shockingly, it might not sprinkle liquidity fairy dust on the economy in December. Apparently, maybe we will, maybe we won't, isn't the confidence booster Wall Street was hoping for. Markets from Asia to Europe opened deep in the red, and the U.S. futures politely continued the trend by pointing straight downhill. And Bitcoin didn't handle any of this particularly gracefully, slipping to levels it hasn't seen since May and extending a month-long slide that erased a hefty portion of its post-all-time high victory lap. Two forces seem to be driving today's leg down. First, we have rate cut uncertainty. Bitcoin, as we know, loves liquidity like it's oxygen. And when the Fed hints that oxygen tank might not be getting refilled, prices tend to wobble. Secondly, the tech sell-off. When investors see both AI stocks and crypto stocks taking nosedives together, they tend to treat Bitcoin like it's the last item in their shopping cart, and they're suddenly not very hungry anymore. So the day's takeaway is actually pretty straightforward. The Fed blinked, markets panicked, tech threw a fit, Bitcoin, as always, the dramatic one, slid to a 6-month low as everyone stared at their screens wondering why the macro gods have once again chosen violence. All right, we're bringing Dan back. Dan, every time Jerome Powell sneezes, Bitcoin seems to catch the flu. So from your perspective, how much should Bitcoin actually care about Fed rate decisions, or is this just short-term noise from a long-term separation that's already happening? What do you think?
Well, I think the long-term thesis of Bitcoin is sound, right? I mean, like, there's a reason I'm all in on Bitcoin, and it's not because I think it's a tulip bulb, you know? And given that, I also recognize that the vast majority of people that have exposure to Bitcoin aren't like full-on lunatic maxis like me. So I totally get like that sort of like desire to read the tea leaves and try and figure out what's what and what's driving this and what's driving that. So, you know, when the Fed comes along and starts, you know, getting wishy-washy and doing whatever they're doing, I think Lynn Alden has been speaking about this for a long time. We are entering a phase of fiscal dominance. So a lot of this is just, you know, fiscal theater as far as I'm concerned. Like sooner or later, they have to, you know, hit the big red button and start printing. And I think Bitcoin thrives in that environment. But I'd also point out to people that they're, you know, the way trading happens today and the way markets trade today, like I just posted a thing on X the other day. It said, you know, you take the stairs up and the elevator down, right? But I think this is also part of the algorithmic effects of having computer aided trading and algorithms and things like that that are managing investments. Because it used to be like a bunch of guys in a room smoking cigarettes trying to figure out what's what. And they're trying to glean alpha from just like talking to their buddies and going, hey, Sam, what did, you know, Joe say over at Lehman Brothers or whatever?
Right.
But today it's all in the background. There's some guy with a PhD in astrophysics that's going, well, I think, you know, there's a 4.36% probability of XYZ happening. So we're going to plug that into the algorithm. What that has, the overall that though, is it dampens the way up, right? Because these algorithms are designed to maximize profit and reduce losses, right? As mathematically sound as possible. So if you're talking about taking profits, that means you're selling on the way up. And if you're talking about avoiding losses, you're selling on the way down. So I think that's why we can see a lot of this sort of action happening in the markets. And I think it behooves people to just kind of, especially if you're really into Bitcoin and you really have a solid thesis for why it is you want to hold this and why you think it's the most valuable asset on planet Earth. I think the smart play is just sit back, you know, the old trope, right? Stay humble, stack sats, just kind of sit down, have a coffee, go touch some grass, and, you know, kind of ride the waves. Because that's, you know, for those of us who've been around a while, this is just like par for the course, man. You just got to get used to the up.
Yeah. Anybody who's been in Bitcoin for at least a couple years know this is just kind of how the way things works. And it looks like you're saying right now things are happening because thanks, robots, which might end up being the calling card for the 21st century when it's all said and done. They're controlling the algorithms now. Pretty soon they're going to be in our houses. They're driving us around. It's a weird world we're living in now. And, you know, people often talk about Bitcoin as being this hedge against monetary manipulation, right? And when markets panic because the Fed might not cut rates, do you think that tells us that people still see Bitcoin as part of the same system that they claim that it's replacing?
Oh yeah, 100%. I mean, like I said earlier, the vast majority of people still treat it as like a risk asset, right? And a lot of people that have exposure to it think of it like in a speculative play. They go, well, you know, maybe number go up and maybe I can cash out and I can go buy myself a new suit or whatever. So when these Fed rate decisions come along, they tend to follow the herd with the rest of the you know, TradFi guys, and they kind of go like, oh, TradFi's doing this, we're doing this, you know, and it's all sort of lumped in that same bucket, right? And especially when you start talking about ETFs, the ETFs are handling this kind of thing. They're very, very sensitive to Fed rate decisions. And like I said, those algorithms amplify it on the way down. They go, okay, well, we have to cut losses here, so sell. And then every other, you know, there's 500 other algorithms doing the same thing. So they go sell. And all of a sudden you see this big drop. But I think the people that maintain a long-term thesis are kind of immune to the Fed rate decisions because, like I said, we're entering a phase of fiscal dominance. And sooner or later that printer comes on. And that's where you want to be as a hard asset when that happens, right? And right now, if you survey the landscape, Bitcoin is the hardest asset to get into, but you also have to take into account that this is not like a cyclical type investment thing, right? You don't do this like, oh, I'm going to be in this for a year, 6 months. You know, this is like a 5-year, 10-year, 20-year type time horizon. But it's the same way you trade your house, right? Like you in and out of your house and go, oh man, houses are going down. I'm going to sell the house this week, and next week I'll buy another house, and maybe I'll try and catch the upslope on the housing. I mean, you just don't do it that way. you buy the house, you sit
Yeah.
on it, and, you look back 20 years later and go, hey, that thing I paid 70 grand for is worth 2.4 million. Neat. But that's the kind of idea of what I'm trying to get to is like, yes, there is a lot of sensitivity around those Fed rate decisions, but it's a lot of short-term thinking, and it's understandable. We live in a fiat system. People are very accustomed to fiat things, and fiat things move really quickly. But if you have access to an asset that appreciates over time, you just kind of want to, you as best you can. I know, and for some people they can't, right? Like they need to pay the rent or whatever. I don't blame them. But if you have the ability to kind of save and use it as a savings technology, I think that thesis plays out. I think it becomes a risk-off asset. It's just I don't know if we're necessarily there yet. So.
Yeah, you draw an interesting parallel that I hadn't heard before either. It's like kind of treat it like it's a house. And the reason people generally don't sell their house with the price fluctuations is because it's not a particularly liquid asset, unlike Bitcoin that's very liquid and I can sell it right now on my phone in 2 seconds. But maybe I shouldn't be treating it like a liquid asset, and people in general should be taking that longer time horizon. As we know, scale back, and any Bitcoin holder who's held for 4 years has never been underwater. So that's a really interesting and I think way to go about it. And I wish people would take that approach. Well put. All right, we got a next story we're going to chat about here, so hang 10. Dan, we'll be back with you in 2 seconds, because Donald Trump is apparently pressuring Republicans to block the full release of Epstein's Justice Department files. Trump has been leaning heavily on congressional Republicans to block a House vote that would force the Justice Department to release all of its Epstein investigative files. Now, Representative Lauren Boebert was summoned to the White House Situation Room, where the Attorney General and FBI Director tried to talk her out of supporting of the release. Trump also called her personally. She did not seem swayed, however. He reached out to Representative Nancy Mace as well, another Republican who signed the petition. They didn't connect, but she responded with a lengthy message explaining her own history as a survivor of sexual abuse and why she would not be changing her position. She later wrote that the Epstein petition is deeply personal. Meanwhile, Democrats on the House Oversight Committee dropped 3 newly obtained emails. One email quoted Epstein saying Trump knew about the girls, while another described him as a dog that hasn't barked and claimed he had spent hours with the victim at Epstein's house. Trump's team fired back, calling those emails cherry-picked, and Republican members responded by dumping more than 20,000 additional documents onto the pile. On the other hand, newly released House oversight documents show that the Fire and Fury author Michael Wolff was actively coaching Epstein on how to politically kneecap Donald Trump during the 2016 campaign. Wolff warned Epstein that CNN might ask Trump about their connection and suggested that if Trump lied, Epstein could hang him with the truth and generate a debt. As Trump's poll numbers rose, Wolff kept urging Epstein to go public, calling him the Trump bullet and encouraging him to drop something before it's too late. This all reads less like political correspondence and more like 2 Gotham villains arguing over who gets to monologue first. It's a weird one, but we're bringing back Dan to talk about it. Dan, power, secrecy, corruption, basically everything Bitcoin was built to fix. When you see stories like this, do they reinforce your belief that centralized systems will always protect themselves first?
Well, I have a nuanced take on that, because I think these centralized systems arise from efforts to control resources, right? And so if you come from that perspective, you look at it and you go, well, people are trying to get power for power's sake. I go, well, kind of. But if you look at it from a different angle of like, hey, all of these economies that we've kind of grew up in are predicated on the idea of like, hey, I can come and take stuff from you, and then I can have dominion and control over it, right? So when you see these power struggles and all these kind of things, if you have a property that you can't seize, like Bitcoin, then it sort of changes that game. But in terms of this like Epstein file stuff and the sort of intrigue that goes on behind the scenes and what's going on, in the halls of power, there's a great skit. I wish I had the guys' names at the top of my head, but I don't. But there's like 2 bro guys sitting in a room going like, hey, we got to get this Epstein thing out. And the guy goes, no, dude, we're on that list. I go, what do you mean? How could we be on this list? This is a bad thing. It goes, no, it's the Epstein thing. Like, oh, that was Jeff's thing? Oh, dude, we can't release that. So I was like,
oh, jeez.
Joke. I'm like, but I think it sort of speaks to the whole, discourse around it. And the thing I would point out to people, and I have been for years, if there was any political capital to release those files, they would have been released a long time ago. But there's both sides are implicated in the same. Right. So it's always surprising to me when someone starts pushing one way or the other. I think the likelihood of anything coming out that's going to be damning or not something that the Teflon Don can wiggle through, I think is pretty low, especially given the history of it right now. You know, it's even funny to watch the guy pivot from like, hey, this is campaign promise. We're going to get this out there. We're going to, we're going to release those files. And then today it's like, well, it's the hoax. And, so you're like, wow, man. But, the memory nowadays and people just, bounce right through it. So we'll see what happens, I guess. I don't know.
Yeah, Teflon Don somehow remains undefeated to this point. But it does kind of beg the question, this whole situation, when politicians campaign on transparency, but then they fight to bury inconvenient files, what lesson do you think Bitcoiners should take about who controls information and why it matters to control your own keys, your own data, and your own truth?
Well, that's a great point, man. There's a quote that floats around Bitcoin circles. There is no red, there is no blue, there is the state, and there is you. And like I said, if you approach this from an idea of like, hey, this is a competitive resource capture game that we're all playing, and you can capture a resource that can't be stolen from you, they put you on the board as a player. You go, hey, I actually own something that the state can't just come willy-nilly take from me. Like if the state wants to come bulldoze your house and make a freeway over it, they're going to do it. Like you can bitch, you can complain, you can file lawsuits, do whatever you want. If they just decide one day, hey, we're doing this, that's what's happening, right? But they can't do that with Bitcoin. They can't say, hey, this is mine now. So it sort of adds a wrinkle to the game that's been being played for a long time. And I think the takeaway is like when you see these sort of political machinations, those are people that are struggling to acquire power. Those are people that are struggling to acquire resources. You can sort of check out of that game. You can just kind of go, well, you guys go play your game. I'm going to play my game. That's a UTXO set that I manage in self-custody. So I think it's a smarter play long term. And once you check out of that sort of narrative that's the constant media cycle of like, drama and whatever, because you have to also recognize this is going to be memory hold. Like in, like it was just a couple of years ago, Trump got shot and people just kind of forgot about that. And there's all sorts of horrible things that have happened that just kind of, they come and they go, but it's all part of the algorithm and people are on to the next. Someone's going to be on the next thing. And once you recognize that pattern, you go, oh, well, I don't really have to, I can't do anything about it. I can sit here and fret about it. I can get angry about it or whatever, but you have no influence on the outcome.
Right.
What you can influence is what you own, how you participate in the world, how you interact with your fellow man, what sort of productivity you bring to the world. And you can store the efforts of that productivity in an amazing asset called Bitcoin. So that's sort of my thesis there. That's kind of how I approach the world.
Yeah, no, I feel like especially in today's society, that is a really good way and approach to things. And I wish more people out there would take that lane. And hopefully they will, as people get introduced to Bitcoin. It seems Bitcoin is so interesting because I've never seen like an asset or a currency. And I actually had a friend who kind of gave me crap about this yesterday. And he was like, it seems like the Bitcoin community is like kind of gives me this vibe of like religious zealots or something. And I'm like, that's not it. It's just like people see this answer to this problem that is plaguing all of us and is hurting all of us. And they're passionate about, kind of usurping this old system that's not doing any of us favors in favor of this new thing that's come along. But, that's often a common response from people that just haven't done the research yet. So we're used to that FUD, and we're going to do our best to orange pill them as we do our thing. So we'll keep moving on. And we got another story to talk about, so hang 10, Dan. I'll be back with you in just a second, because according to a new JP Morgan survey, billionaire families have officially decided that collecting paintings and vintage Ferraris is for peasants, and that the real status symbol is owning an entire sports franchise. The bank's exclusive 23 Wall division polled over 100 billionaire families, and the results show a massive shift. You see, 20% now own controlling stakes in sports teams. That's up from only 6% just a few years ago, which means that billionaires are basically hoarding NHL teams the way normal people hoard streaming subscriptions. A third of billionaire principals are pouring money into teams or arenas, while art sits at 23% and cars are barely scraping double digits. A team at JP Morgan analysts say that valuations keep climbing thanks to media rights deals and sponsorship money, with US and European franchises now valued around the $400 billion mark. Many billionaire owners said that they do it to bring their families together, which is funny because nothing unites a family like screaming at referees. Now, the issue is that valuations have gotten so ridiculously high that even some ultra high net worth individuals are getting priced out of owning a full team. Wah, wah. But let's not worry here. Wall Street has invented ways for the rich to still feel included. Investors can join ownership groups, buy minority stakes, invest in arenas, or throw money into sports-adjacent businesses like analytics or merchandising. Many family offices are already doing it. Blackstone's David Blitzer, the first person to own equity in all 5 major U.S. sports leagues, has spent the year collecting sports companies the way Pokemon trainers collect Pokemon. He's invested in everything from a paddle club chain to a betting app, because apparently owning half the sports world just wasn't enough for him. So the verdict is actually pretty simple. The ultra-rich have moved on from art galleries and car auctions. The hottest hobby in the billionaire class is buying sports teams. The only collectible that appreciates in value and gives you an excuse to fire someone when the season goes badly. Bringing Dan back. Dan, billionaires used to buy art to feel culture. Now they're buying sports teams to feel relevant. What does this say to you about the state of wealth, ego, and search for meaning in a fiat world? What does it tell you?
Well, it actually tells me a little different story, and the kind of the story it paints for me traces back to what I was talking about with algorithmic trading and things like that. There are things now that help these sports teams become profitable. Like if you bought a sports team in 1980, like you were beholden to the forces, the whims of the gods, right? The fans don't show up, you got a bad season, whatever,
right.
Like the merchandising doesn't quite work. So it was really hard to extract all that value from that. Modernly, like you just mentioned, these teams are valued at like extraordinary valuations now. It's because they become profitable finally. But I liken it to the airline industry.
Right.
Like if you were a wealthy investor back in 1975 or 1985 or something like that, and you wanted to go buy an airplane company, an airline, the likelihood of you making money was effectively zero, right? It was just a way to like tax loss harvest and have something to write off on your balance. And there was a prestige to it. You go, hey, I own an airline. But like Richard Branson was very famous for saying, hey, if you want to become a millionaire, start with $1 billion and buy an airline, But modernly, because of these computer options, they can now maximize the number of seats. They can route things more efficiently. They can track everything down to a data point. So now they've turned this model that was very, very hard to make money with, 30 years ago, is now basically a cash cow. I think the same things happen with these sports teams, and I think these ultra wealthy people are starting to recognize that. So there's this huge prestige value of like, hey, I own the Mets. It's not a bad thing to drop at a cocktail party, right? But there's also that little thing underneath where you kind of go, hey, there's actually a business model here that works, because we are able to capture a lot of the things that were getting left behind back in the days when there was a bunch of guys smoking cigarettes in a room going like, hey, how are we going to get more people to buy beer? I don't know, man. Like, what if we change the cups, right? Like now we have much more sophisticated ways to make sure that those teams are profitable. So that's sort of my thesis right now, but I don't know.
Yeah, no, that makes a lot of sense. If you ever saw the HBO Showtime doc about the Lakers, they get into the deep with about Jerry Buss. When he bought the Lakers, they were not profitable. People were not going to games. And today it's like you own a sports team, you're basically printing money through merchandising, ticket sales, media rights. So yeah, it's this whole new forum, and not a big surprise to me that, and like you said, it's not a bad thing to bring up at a cocktail party. So that prestige element to be like, oh yeah, did you go to the Bulls game? And be like, yeah, well, I own part of the Bulls. It's a nice look, so I definitely get it. But we're going to move on from this one and get back into this next story here. So hang 10, Dan, because Michael Saylor's strategy managed to do something you almost never see in finance. Its entire company became worth less than the Bitcoin that it owns. For a moment this week, Strategy's market cap dipped to about $65 billion, while its 641,000 BTC were worth closer to $66 billion. That is basically the market saying, we love your Bitcoin, but everything else, yeah, you can just keep that. Normally, Strategy trades above the value of its Bitcoin because people used it as a leveraged way to bet on BTC before ETFs existed. But now that everyone and their cousin can buy spot Bitcoin ETFs, the premium around Strategy has evaporated like it was made of flavored LaCroix. The big problem here, well, Strategy bought its mountain of Bitcoin using debt, new shares, and of course more debt. And all of that borrowing is starting to spook investors who suddenly remember that buy Bitcoin with infinity leverage might actually have a downside. The company keeps issuing more shares to buy more Bitcoin, which means every time they do it, each existing share owns a slightly smaller slice of the pie. Investors finally looked at the math and said, wait a second, why am I paying extra for risk when I can just buy Bitcoin directly? Well, sentiment across the market hasn't exactly helped either. Fear is high, ETF inflows are uneven, and people want the simple option, not Bitcoin wrapped inside a corporate structure with debt attached. Bringing back Daniel to chat about it. Dan, so Strategy stock is now worth less than the Bitcoin it owns. The market basically said, we like Satoshi's plan better than Saylor's. What is your take on all of this? Because this is kind of a big deal in the Bitcoin community right now.
Yeah, I see there's a lot of banter about it, but I mean, people are always sort of jibber-jabbering about MicroStrategy and what Saylor's doing over there. I think if you actually listen to the guy talk, and he's spoken on this at length, he says, look, we're coming up with products that institutional traders can get in and out of, and they do a lot of trading around the volatility of Bitcoin, and then those Bitcoin holdings sort of feed that. And so I know there's a lot of like this sort of narrative, like infinite money printer machine kind of nonsense or whatever. But ultimately, like, I think Taylor's strategy is very much long-term, just like I was speaking about for individual holders. I think his long-term view is like, well, if we hang on to this thing for 20 years, we're going to be crushing it. It doesn't matter what our share price does. If we can, use the volatility, and we can use some of these I call them almost like vibe-coded, investment strategies. Like he's talking about, like, sat down with the AI, smoked a doobie. I don't think he said he smoked a doobie, but I think he sat down with an AI and came up with like a cool investment vehicle for my Bitcoin. Like, what are some things, and then he put that out in the world. And I go, well, I mean, if you trust the robot, go nuts. But Michael Saylor's job is to sell Michael Saylor stuff, right? He's there to go sell strategy shares. But I think in the back of his mind, if you treat the guy as like a legit orange pill guy that goes, hey, Bitcoin is the thing. You want to own this thing, as much of it as possible. I don't think he cares about the debt. I don't think he cares about the share price. I think he's going like, as long as I have more of this than anybody else, I win the game. And if you take that as true, then what he does in the meantime is just like make sure that game keeps getting played. Like make sure I keep capturing as much of this Bitcoin as possible. But in the short term, if you've gone and bought a derivative and now you're selling your derivative, I go, well, that's just trading, right? I mean, that's if you go buy shares of Nvidia and then it dumps and you decide you want to dump Nvidia or whatever. But I mean, you could look at the balance sheets of any of these companies and go, all of this sounds like a terrible idea. So I don't know why anyone would isolate MicroStrategy out of that big cluster of, like, just look at the debt arrangements around Nvidia and how they do vendor financing and stuff. And if you start peeling back that onion, you kind of go, ooh, that's not great. So I don't know. I mean, I kind of give props to Michael Saylor. He's a great advocate for Bitcoin. But what happens to his company, I'm sort of like, nah, I got Bitcoin. I don't care.
Right. I mean, his conviction is admirable, but I really appreciate what he's done for the community. He's been a pretty good evangelist for Bitcoin as a whole, but in terms of strategy, I don't care. It also kind of brings an interesting question. Like, you build for self-custody, strategy builds for corporate custody. Do you see this as maybe being a moment where the market is finally learning the difference between holding Bitcoin and holding a company that holds Bitcoin?
I wish that were true. And I don't think we're quite over that bridge yet. Like, if you just look at the numbers, and I break these numbers down all the time, it's 90% of people that have Bitcoin have exposure to Bitcoin, meaningful exposure, like more than $500, let's say. It's like 90% are on exchanges or through, derivative assets, right? ETFs or corporate holdings or whatever. So I don't think your average Joe has sort of crossed that boundary yet. But there is that subset of people like me that goes, oh, I know what I've got here, and I don't want to give that to them. I want it in my pocket, right? So if you are actually restrained, like you just can't buy it. Like if you're a company, you go, we can't put that stuff on our balance sheet. Well, my accountant will have a heart attack, or the IRS will audit us, or whatever. Then these derivative options make sense. But if you're a pleb and you're just a guy that's just kind of sitting there and like trying to figure out how to put the groceries in the fridge, and you're paying your bills every week, like I think spot Bitcoin, and by spot I mean you hold a UTXO set. And for those who don't know what that means, it's an unspent transaction output. That means you actually have Bitcoin that's yours, that you can lay claim to with your own seed phrase. Those are the more appealing investments to me if you're going to look at an asset to pick up and hold for a long time. So, like I said, if you can't get into it, maybe try a derivative. But if you can, take the leap. Just transfer some into a wallet and go nuts.
Yeah, at the very least, I appreciate them as on-ramps to the space for people that, self-custody is still an issue for a lot of people, and that's understandable. So I do appreciate its ability to onboard new people, but Is it the best way to hold your Bitcoin? I think you and I have other ideas on that, but that's okay. All right, we got one more story, and it talks about holding things too, so stay tuned, Dan. We're going to chat about this one in just a second because Apple's new product drop proves that they can turn literally anything, including a sock for your phone, into a luxury statement. You see, the company teamed up with Japanese fashion house Issey Miyake to launch the iPhone Pocket, a $150 to $230 wearable accessory that lets you carry around your iPhone like it's a tiny purse with illusions of grandeur. Now, the collaboration revives a decade-old relationship between Apple and the late designer Issey Miyake, who famously created Steve Jobs' black mock turtlenecks, aka Silicon Valley's first superhero uniform. Excuse me. Now, the iPhone Pocket is made using Miyake's APOC, which is a piece of cloth method, a 3D knitted, seamless textile that wraps around your phone, stretches to show the screen, and can be worn handheld, tied to a bag, or strapped to your body. It's kind of like a sock, but let's call it couture. Apple and Miyake described it as a singular 3D knitted construction designed to explore the joy of wearing your iPhone in your own way, which sounds poetic until you realize they're describing a $150 iPhone sling. The short version costs about $150, but the long version can cost you close to $230. Both are made in Japan, compatible with any iPhone model, and guaranteed to make you look like your phone just joined Paris Fashion Week. Now, the collab has some sentimental roots. You see, in the 1980s, Steve Jobs admired the company uniforms Miyake designed for Sony and wanted Apple employees to wear something similar. Now, when he pitched the idea, the staff booed him off the stage, but Jobs kept the friendship and asked Miyake to make him 100 black turtlenecks for himself instead. Those turtlenecks became his signature look, paired with Levi's 501s and New Balance sneakers, creating one of the most recognizable CEO outfits in history. Now, nearly 2 decades later, Apple's bringing that same energy to accessories that cost as much as a pair of actual jeans. We're bringing Dan back. Dan, what do you make of this? You going to get one of these iPhone socks and sling it over your shoulder, or is that too couture for you as it is for me? Tell me about it.
That's the next must-have Christmas accessory, right? I mean, props to Apple because, like, they can turn a $1.50 thing into a $150 profit margin. It's pretty astonishing ability from their marketing team. We'll see how much traction it gets. But the thing is, even if they sell it to like 5% of the customer base, like, it's just an enormous, like, hey, well, let's just print some money this week. All right, what are we gonna do? Well, I don't know. Tom's got some extra socks. Like, let's just make something like.
Yeah.
So if we just get this designer guy to make us a sock like Tom carries around, I don't know why Tom does it, but he does. So, I mean, it's just like, I don't know. There's a little bit of genius to it. I don't know what Steve Jobs would necessarily say about it, but I think there's a lot of stuff that's come out since Jobs has passed on that, like, I think Jobs would look at it and go, what are you guys doing to my phone? Like, why did you do all this?
Yeah.
But, I mean, it's hard to speculate. And I'm never going to tangle with the marketers at Apple because they've got that pretty much buttoned up. So who am I to say, like, hey, this thing's a little ridiculous? But, I mean, I'm certainly not.
I got to imagine
lining up on Black Friday.
Jobs is looking down with an eye on Tim Cook and being like, I brought us the iPhone, you got us this wearable sock? Like, come on. Like, the only way this makes sense to me is if you're ever familiar with how the company Dollar Shave Club started. The guy literally just bought like 10,000 razor hair. Or he had 10,000 razor heads and he didn't know what to do with them. And he started $1 billion company. This sounds like Tim Cook made a bad investment into an apparel company, is stuck with millions of socks. And he's like, wait a second, I know what we can do here. We'll put iPhones in them. And that's history now. So my goodness. All right, let's get off this story. We want to get into our deep dive with you to learn a little bit more about Dan White. So let's roll the stinger, guys, and get into it. Let's go. All right, so we're back with Dan White of MicroSeed for our deep dive. So Dan, I want to get into the beginning of your story because you've got an interesting background. You've got a JD from an MSc from the London School of Economics, and now you're building Bitcoin hardware. Not exactly a straight path. Tell us, like, how did that journey happen and what pulled you into the Bitcoin world to begin with?
Oh my goodness. Well, I'll try not to be dull. I'll do my best. But I mean, I've been like a lifelong libertarian. Like, I was raised in a libertarian household. My dad was like a hardcore libertarian guy. Like, he had a picture of Ayn Rand on the wall, and my mom used to get like, who's that lady? And kind of freak out. And if you've ever seen Ayn Rand, It's not a person you need to get jealous about. But nevertheless, like by the time I was
Yeah.
10 years old, talking about like, we need sound money and we should ban the post office and we need to privatize everything. So, I mean, I was just parroting whatever my dad was saying, but that's sort of how deep this goes. So by the time I got into my 20s, I'd been kind of navigating these spaces for a long time. I ended up working in the film and television industry for a while. And when I was about 35 or 36, I think I was in couples therapy, all sort of crazy places. And the lady looked at us and like, therapy, you guys just need to grow up. Like you need to go get an education. You need to go do that. And I was like, and I heard that and I'm going, well, I'm paying you $150 an hour. I guess I'll go get an education. So quite literally just on a whim, I went to law school. And when we're talking about Better Call Saul, like that's kind of the equivalent of the law school I went to. It's not like I went to Harvard or Stanford or something like that. So I tried to polish that degree. I went down to the Thomas Jefferson School of Law in San Diego and got a Master of Laws down there and printed a bunch of research, like legal scholarship about like money laundering and bankruptcy law and stuff like that. And from that research, I actually ended up at the London School of Economics, because even Thomas Jefferson turned out to be kind of somewhat of a ding-dong school. It was reputable when I got there. It's kind of lost some prestige since. And I thought, well, hey, some in the School of Economics is hard to argue with. But that led to some more research, which all that research then led to a whole other cadre of things. I went in public service. I worked for the prison system for a number of years. And then I invented the MicroSeed just out of need, like desire. I mean, it was a selfish desire. I just wanted a thing that could do what the MicroSeed does, which just put all 24 words of your seed on a single washer. And this was after buying a competitor's product, and I'm sitting on the floor like a baboon with my girlfriend looking at me like, what are you doing, dude? And I'm like whacking away. I got to put my stamp. I got to stamp my words, And I bashed my finger, and I kind of looked at I didn't like what I ended up with. I mean, it works fine, but I wanted something. I thought, well, hey, what if I need to get on a plane? What if I need to travel? What if I want to make another wallet? What if I want to do this? Want to do that? I wish someone would just do this. And no one was doing it, so I just went and said, oh, I'm going to make it. So, we often say, like, we don't do this because it is easy. We do it because we thought it would be easy. So we've learned some that.
Yeah, that is quite the journey. And I want to get a little bit, stay kind of toward the beginning of that journey a little bit, because, there's that old saying, and that saying is, you always remember your first time. So I want to learn about your first time. Was there a specific orange pill moment or a conversation or a piece of news that kind of made things click for you? Because what I've noticed in my conversations with Bitcoiners is that it seems to be a familiar story. They hear about it, they kind of brush it off or ignore it for a while. Many people think it's a scam. Then they go down the rabbit hole, and then the switch kind of flips for them. What was that process like for you?
Well, it was a very different process for me because, like I said, I came from that libertarian background. Like, people kind of dog on Peter Schiff to this day, but I was reading his books like in the 90s. Right? He's always been a sound money advocate. He's been talking about the gold standard and stuff like that. And so I was kind of deep down that rabbit hole. That sort of worked against me when Bitcoin came along, because like right around the time Bitcoin came along, my father had passed away, and I had some money from his passing, and I was looking to invest it, and I had heard about Bitcoin. I was researching Bitcoin. I was trying to mine Bitcoin, and this was probably 2010, 2011. And I could never figure out how to mine it, but I ended up finding some guy, and my memory is super foggy around it, but like some guy, I ended up sending him a money order. I remember that much. And he sent me some of Bitcoin. And then I kind of deleted the wallet about it, 6 months later, a year later. Like I just kind of went, this thing's a joke, whatever. But I had all those sound money ideas in my head. But I was around Bitcoin very, very early on, like in 2010, 2011. That bankruptcy or the money laundering paper I was talking about, I actually have a little treatise on Bitcoin in there. And that was in 2014. I was talking about how Bitcoin works, what use it does in money laundering, and what it might be and what it might not be. I actually cited the gal from University of California, San Diego, who ended up creating the method that people like chain analysis use today. So that was sort of where I was at in the space. But I kept looking at it like, it's a vapor coin. It's I had Peter Schiff's voice in my ear. But it wasn't until around 2019, 2020 that I started getting back into it. But I thought it was just another like speculative thing, right? But there were a couple things that combined. It was Michael Saylor's series with Breedlove and a kid named Jason Lowery who wrote a book called Soft War. Now the Soft War people, his critics, they kind of pan him a lot for some of the stuff he said. And it's not like I agree with every single thesis he had. But I also like to point out, like, the kid was like 22 years old and he's doing a master's thesis. Like why are we going to like hold this guy up like he's like deep research scholar, right? But some of the things he talks about in there is like this egalitarian zero trust access to, property, pristine property, I think are valid valid themes. And when you listen to the Saylor kind of thesis on what this means in the terms of like the monetary history of the world, those two things combined, and I went, oh, I've been wrong about this the whole time. I need to, so I shifted gears right there. But relatively late, given my early exposure, like I was probably 10 years after I had already heard about it, looked into it. So it's like people say, you get Bitcoin at the price you deserve. You come to that orange pill when you're ready for it. It took me a decade to finally go, oh, I get it now. So maybe that's just because I'm
studying. That's the longest I've heard. Usually it's like, oh, I ignored it for a year, maybe a couple of years, but it was a full decade because you were in it really early. Then you got back into it, but still, we're still early. So I got good news. You're still okay. We're all good. This is still early, as I think we all know. And now that journey has brought you to MicroSeed. So I want to talk about that a little bit. So for anyone in our audience that's new to MicroSeed, like what is it and how does it fit into the larger mission of Bitcoin self-custody today?
Well, as I've mentioned a couple times, I think taking self-custody of Bitcoin is a very, very important step for any Bitcoiner to take. Whether you put your whole stack into self-custody or not, I don't think is necessarily as important, but I think starting to learn what that means to do UTXO management, to understand what it means to take keys, take possession, put things in cold storage, keep things air gapped. Like these are sort of next level technical decisions that you have to wrangle through, and there's things you have to think about. So I don't blame people when they just keep it on exchange and go, hey, I don't want to mess with any of that stuff. And especially the folks that are sort of technically challenged, where they go like, I don't get email, dude. Like you want me to go do all this weird stuff? Like it doesn't make sense, right?
Right.
But I think there's some merit into like maybe stripping off just a little bit, $100, and just put it in a wallet and just figure out how it works and kind of make some mistakes and get to it. And part of that self-custody journey is not only do you have to manage all this stuff, but when you take custody of it, you get these things called seed words. That's the keys to your Bitcoin. And if you don't know, Bitcoin is a bearer instrument, right? And it's just like a bearer bond. Like if you watch the movie Heat, they went and stole bearer bonds in that big armored car heist.
Right.
Bearer bonds are things from back in the day. Whoever has the thing in their possession has the access to the capital that bond represents. Bitcoin is the exact same thing. Whoever holds those keys owns the Bitcoin. It's not, you have a paper claim to it if you have it on Coinbase or Kraken or whatever these exchanges are. You have a paper claim to it if it's an ETF, but you don't actually own the Bitcoin. So if something happens to that company, and even if the company, like if Brian Armstrong just went nuts one day and he went all BitBoy on the world and just decided, I'm taking all the Bitcoin, haha, and he's on a coke-fueled rampage, for you to get that back, you're a real pain in the ass, right? And especially if you're fighting a company that's got, a multi-billion-dollar war chest behind it, like, what are you going to do? Go sue them in small claims? And never mind how long is it going to take for you to get back, and are they going to wait and rehypothecate it and use it for all kinds of stuff, or is the BitBoy Armstrong just going to go off and be in Jamaica somewhere in a hole just doing crazy stuff? So that's where the MicroSeed comes in, because once you take self-custody, you have to store those seed words somewhere. And if you have it on a piece of paper, which a lot of people do, they just go, I'll just write this down, throw it in the desk somewhere. The house burns down, the seed words are gone, and you are no longer the bearer of that instrument unless you memorize them. And memory is a fickle thing. So, like I have trouble remembering yesterday, let alone 24 words. So what MicroSeed does is let you stamp all 24 of those words on a very small device, like a 1-inch stainless steel washer or titanium washer. This gives you some fire resistance, corrosion resistance, protects you against flood and things like that. But it's also super easy to hide. So it combines a lot of things to make it so you can start your self-custody journey safely, is what we're kind of going for.
Yeah. Oh, I mean, anybody who's had to write down that seed phrase and you're putting it, you're like, where do I put it? I can't put it beneath my keyboard. That's too obvious. Like, you're always looking for these weird places, and having a physical thing that can withstand time and the things that happen over time, a house fire or whatever, is a big deal. And I got to say, I've been kind of cracking up internally when you talked about going to small claims court over your Bitcoin. I can just imagine like a Judge Judy episode. It's like, this episode of Judge Judy, Dan White is suing Brian Armstrong from Coinbase, alleging he went on a coke bin and took all of his Bitcoin. Like, God, that's the episode I didn't know I needed. So thank you for implanting that idea in my mind. And as you joked earlier in the show, you thought that this would be easy, but it turns out it wasn't as easy as you anticipated. So my question is, like, what was the moment you realized, or you maybe started thinking for a moment, like, maybe I'm over my head here, and then what kept you from quitting and forging on and building MicroSeed?
Well, I have that thought pretty much daily. I mean, like when I got into this thing, like I thought, okay, hey, I can just 3D print this thing. It'll be easy. I came up with an idea. I printed it, didn't work. Another one didn't work. Tried this, didn't work. Tried. So I went through all these different iterations, and meanwhile, I'm like teaching myself CAD because I'm not, like an engineer by trade. So I'm just like, how does this CAD thing work? And I'm old, and so trying to figure out new software is like, it's like trying to teach a dog how to drive a car, basically. But I muddled my way through that, and I had some experience doing machining work, like hobbyist machining. So I had some idea about what that entailed. But the tolerances to make these letters are very, very small. They're like 1 millimeter. So to get that all lined up and working properly is an effort that requires a lot of thought and a lot of tinkering and trial and error and things like that. But we ended up with this design where some of the tolerances are so tight we have to use a specialized machining process called wire EDM just to hold the tolerances tight enough. And it was through that sort of iterative process that I finally got to a place where I was like, okay, not only can I make this thing, because I had just originally intended to make one for myself, but I got to a place where I was showing it to people like, dude, this is amazing. Like, I want one. I'm like, oh, well, maybe I could sell this thing. So I thought I'd maybe sell 10 or 20 kind of thing and just have like a little hobby business on the side. But, a couple of people retweeted it, and all of a sudden the thing started taking off. I was just like, oh my God. But then I get into this whole thing, international supply chains and tariffs and all this stuff that I'm just, like customs and clearing customs and like all these different terms. I mean, it's so this whole other world that we all take for granted, right? Like you go down the store, you go, oh, coffee, good. Shirt, I want it. Shoes, I'll take it, right? But what happens behind the scene to make that happen is enormously complex. And so there was a lot of learning curve on that as well. So, but there was never an idea in my mind of like, I'm going to quit. I just went, well, this is part of learning, right? Like you're going to go out, anything you go, if you want to go pick up basketball, you're not going to go out and start shooting like, like LeBron or something like that, right? Like you got to work your way up. You got to make the mistakes. And as you make those mistakes, you learn and you iterate and you grow. And as long as you can keep your ego out of it and you just go, well, someone else figured this out, I can probably figure it out too. Unlike LeBron, I don't have to figure out how to grow up, 6'10" or whatever. I just have to figure out how to navigate. People do every day. It's just complex and opaque to me right now. So that, I mean, it's actually been fun, sort of rewarding. So I kind of enjoy this process so far.
I bet, and nothing that's worth doing is ever easy. Is usually how it turns out, and this seems to be one of those cases now. But now you have them, and people can buy them, which is amazing. And I'm sure you've got a couple people in our audience today that are curious about these MicroSeed options for keeping their password safe. So if people in our audience were interested in maybe getting their own MicroSeed, what do you actually call it? Is it just called the MicroSeed, or is that the company is called the MicroSeed?
Yeah, it's the company's
so
called
it's actually
MicroSeed.
Called the MicroSeed.
MicroSeed. We actually just rebranded it to MicroSeed Pro. It used to be MicroSeed Standard. Okay. So we're tearing a page out of the Apple book. Kind of.
Their branding is on point, so I get it.
Oh yeah, spot on. Yeah, if I could figure that out on the cheap, I'd be doing it tomorrow. But if you want to check one out, you can go to microseed.io. They're readily available. We have little tutorials that are just me like stamping away, so we need to work on that angle of it as well. But you can see how it works. It's a pretty robust design. Everyone that gets one just loves them. They go, "This thing is amazing, man!" Like, and I think it sort of transforms the whole seed storage space. Like, it makes it a lot easier and a lot safer, I think, in a lot of ways, because we offer like a nylon washer. Like, if you were ever, heaven forbid, had to flee the country or you were getting sent to prison or something like that, we have a way where you could take your seed trays with you and it would be opaque and it wouldn't get found, But likewise, we have a titanium washer. You can store that. You can put that anywhere a washer will go, just bolt it to the back of your stove. And, your house burns down. You just got to find your stove and you know where your seed words are. So there's a lot of options there and quick and easy to use. I mean, it's very intuitive. You just kind of, you stamp, you click, you stamp, you click, and it's kind of there. There's no like lining stuff up and banging it 14 times. And it's just a little tap and a little clip away, So, yeah, it's pretty cool.
Yeah, that's super cool. And we certainly appreciate you making self-custody a little safer and easier for all of us out there, because I've been through the ringer with that, and it's not always fun. And having a secure thing that's I'm not going to accidentally throw away in the trash, or like I've done before and had to go digging through the trash, is a very welcome utility for this space. So we're super pumped that we have that available to us, and we're super excited we had you today on the show, Dan. It was an absolute pleasure. And really quick, one more time before we let you go, what's the website people can go to get their own MicroSeed Pro?
That's microseed.io. You can get there pretty straightforward. It's just MicroSeed, like micro, and then seed like a seed, and then .io.
Yeah.
And yeah, all the information you need is there, or you can follow at MicroSeed_IO on Twitter, or you can follow me at Daniel21E15 on Twitter. So all of those have some level of access to the MicroSeed ecosystem and what it takes to get one and all that kind of stuff. So yeah, 100%. Thank you so much. I had an absolute blast with you, Hank.
Yeah, likewise, Dan. It was a real pleasure. I hope you have a nice weekend and some better travel luck for the rest of your time, and you're not stuck at LAX forever. I don't want to come back and hear you're living the life of that guy and from the movie The Terminal. LAX would be the worst place for that. But we do appreciate your time and expertise and sharing them with us today, Dan. So have a great weekend, and thanks again for joining us.
Thank you, sir. Have a great day.
Cheers, you too. All right, we're taking a quick break here at the Blockchain Report, but when we're back, we're going to wrap up this week in style. So stay tuned. More Blockchain Report right after this. Wish you could grab cash without selling your Bitcoin? Yeah, me too. But hey, that's why Ledden exists. They're the global leader in Bitcoin-backed loans. We're talking over $9 billion issued since 2018 with a perfect record protecting client assets. And you might be asking, Hank, what makes a Ledden loan different? Well, what I tell you is that with custodied loans, your collateral stays put. They don't go degen and lend it out for yield. There are no credit checks. It funds in under 6 hours. No monthly payments. You can repay anytime with 0 penalties. And for transparency, grown-ups actually want proof of reserves reports every 6 months verified by a top accounting firm. Bottom line here, gang, is Ledden lets Bitcoin holders unlock liquidity without selling. And you can check them out at ledden.io/RoxomTV. That's LEDN.io/RoxomTV. All right, gang, that is a wrap for another week here at the Blockchain Report. If you want to see our final diagnosis on today, if things are feeling bullish, bearish, or BS, you're going to have to go on the YouTubes and the TikToks, as we'll be releasing our Bitcoin signal later today so you can follow along and see how the market is actually looking. But as always, I want to thank you all for tuning in. Make sure to like, follow, and subscribe to RoxomTV, the Blockchain Report, and me, and Hank at RoxomTV, wherever you choose to do your doom scrolling. And we will be back Monday at our 10 o'clock a.m. slot to 12 p.m. slot. Remember, that's just on Mondays, with more of the Bitcoin bedlam that you come to expect. Right now, we got Nolan on one of his great shows, so stay tuned. You won't want to miss that. And come back for more Blockchain Report next week right here on RoxomTV. Until then, stay safe, stay informed, and always hodl on, baby. See you guys Monday.